Welcome back to the channel, everybody. I am Mick Alphanim. So first, we're gonna talk a little bit about this major XRP news, major Ripple news here. This is crazy. There's always something happening with XRP. Everything's looking great in my opinion. The setups are absolutely beautiful. I don't care about any price right now. That's not the issue right now. We need to make sure our partnerships are coming in. Everything's going good with the SEC case. And they've been doing a great job on both fronts. So we're going to cover this little article here first, and then we'll jump into a little bit of the XRP lawsuit information, okay? So this article here is on thecryptobasic.com, and it goes as such. Ripple bags Japan's first e-commerce adoption as XRP will be utilized to purchase used cars on SBI Motors. If you think it's just going to stop there, I beg to differ. It's not going to stop there. These are beginnings. Everything that we hear when we're talking about any of the bank coins, utility coins, we're only seeing the beginnings. And to a greater degree, these are like tests. They're testing it out. Let's test out the system. And as we get used to it, we'll expand it. It will expand and exponentially. You know, with SBI, I'm going to assume that they're connected to SBI Remit, correct? Right? The bank. And you already know that SBI Remit has a deep relationship with Ripple, right? I believe they also have a relationship with Stellar. Correct me if I'm wrong. It's so crazy how much Ripple and Stellar just cross over. Like, anybody says that they're not working together is, I don't know. I might have to disagree with you on that. There's so much crossover between those two. But anyway, let's read this little tidbit here in the article. The initiative further increases XRP's utility, which has been on a downtrend since the SEC slammed a lawsuit against Ripple. This says further increases XRP's utility. Ryder, what are you talking about? Let me read that sentence again. Just bear with me, everybody. The initiative further increases XRP's utility. Okay. I mean, it's being used. If you're talking about the utilization of its utility, sure. Which has been on a downtrend since the SEC slam. Yeah, well, okay. See, that's a slippery slope, because what XRP was made to do, all of those systems are still being set up. All those partnerships are still being set up. And of course, with the SEC case, and there's no mass adoption just yet, no regulatory clarity. Let's just say that there's no regulatory clarity. XRP's full utility, its true use case, its true purpose cannot be initiated just yet. It cannot be activated just yet. So everything else is sort of just like a bonus. So yeah, it increases how it's being utilized. Its utility is being a liquidity token. That's its utility. Being on a downtrend, well, you know, look, when you're talking about holders of the protocol, sure, a lot of people sold their protocol, sold their XRP. People just in mass, in the last few weeks, people mass sold their XRP. I saw them in the comment sections. They were saying they're done with XRP. They sold their XRP. Okay. So if you're talking in that way, yes, it's been on a downtrend as far as holders, like retail holders. But if you're talking about businesses, I think the partnerships have been either steady or even on a slight rise. They've been making great partnerships. They've been moving lots of XRP to new corridors and getting those corridors ready. So I guess, you know, maybe I'm just being a little bit picky here, like, you know. So let's read a little bit more. SBI Motor Japan, a subsidiary of SBI Africa, has announced that its customers can now make payments for used automobiles using Bitcoin and XRP. It's interesting right there. According to a press release by the company, the development marks the first time Ripple cryptocurrency will be deployed on a cross-border e-commerce website in Japan. More of it will come. Japan loves blockchain technology. Remember Project Stellar, right? Got to take the R off. It was Stellar. Remember Project Stellar when they tested blockchain technology? Listen, Ripple will have a great foothold, I believe, in Japan. There's a lot of ways they can use it. Although never take your eye off the tsunami. This is only a part of the flood. The flood. There's a flood, then there's a tsunami. Okay, those interbank payments, SBI Remit. There's a lot of banks, all right, that stand to utilize XRP across the world. So never take your eye off that big money. especially when we're talking about partnerships. Let's say there's a lull in the partnerships or announcements of the partnerships. Even that's completely fine. We're talking about small businesses or regular businesses, even large business institutions, because what I'm looking for is when the case is over, is when they start making more announcements on which commercial banks they're working for. That's what I want to know. A little bit more. We know a lot of banks, but I would like to know more. Which central banks they're going to be working with. Who are they going to be providing liquidity to? That's the big mystery. You know, the ones we know are only the beginning. That's it. That's not the depth. There's a depth here we're not seeing. We're only seeing the tip of the iceberg. So that's what I'm waiting for. That's what I want to see. Same thing with Stellar. You know, all the different institutions that stand to use Stellar. Same thing. But let's continue right here. It says, notably, Bitcoin and XRP transactions will be settled through SBI VC Trade, the SBI Group's cryptocurrency exchange. That's interesting. SBI to combat money laundering and redacted financing. I'm not going to say certain words. YouTube is very strict. The exchange, according to SBI, will adopt relevant security measures. At least they're strict on me. Remember I said they didn't like that Barry Gensler video. That's why I stopped doing that character. So anyway, I just try to be careful. The exchange, according to SBI, will adopt relevant security measures in a bid to combat money laundering and redacted financing that may arise via these cryptocurrency transactions. Furthermore, SBI also disclosed that it is currently monitoring and examining its business partners to ensure that they comply with AML and the company's rules. Ripple definitely does. 100%. Remember, Ripple was having meetings like every other week with the SEC before they decided to become a rabid dog and just go Donkey Kong on Ripple, you know, throwing barrels down at them, trying to halt their progress. But they were always above board, always compliant, and I see no problems there. SBI noted that aside from supporting Bitcoin and XRP settlements, it will continue to support other important initiatives that meet the needs of its growing customers. Okay, so this is a very, very good development. There's a lot more here. So head over to thecryptobasic.com. This is right on their front page. If you want to read a little bit more about this, I suggest that you do. Let me read just a little bit here. Look at this. Look how much money is on the table here. Citing a 2017 World Bank survey, I think they just put out another survey, right? SBI noted that over 1.7 billion adults still cannot gain access to financial services. Remember I told you, and this is why the bank coins, don't worry, we're going to get to the SEC thing. We have chapters in this video. So if you want to jump to that chapter, you can, okay? The little slashes that you see in the video, those are chapters. Just jump to that chapter if you don't want to hear this. There's the bank coin set up corridors. This is genius how they did it. I love that strategy. They set up the corridors in places that the banks, the central banks, commercial banks cannot reach. We just covered an article talking about that the other day. Last week. They can't reach those corridors. They don't have the ability or the technology to do what the foundations like Algorand, Stellar, and Ripple have done, and they've already done it. So they've been building there for a little while now. So they're able to scrape up all of that extra money. That actually the number is a little bit higher than 1.7 billion. They're trying to do the people that outright cannot gain financial services, but they're not including the partials, right? There's people that have some access, sometimes they don't. I mean, there's a lot of factors in there, electrical grid issues, things like that, corruption. I mean, there's a lot of different factors, like I said. But look at that number. Imagine all that money, 1.7 billion adults. We can scrape up all of that extra money, in addition to taking a large percentage of the capital from the commercial banks, as well as the central banks. But it will begin with the commercial banks because they are the weakest of the bunch. All right. They need the blockchain technology the most. They can be taken over easily. Their market can be taken over quite easily with mass marketing and telling people, hey, listen, you hold your money in a crypto account. You're not going to lose money every month paying for that account. Nope, you have the account for free. You know what? You're in custody of your own money. And you know what else? We're going to give you a crazy, let me not say crazy, a great annual percentage yield. And as a matter of fact, if you stake your protocol, you're going to make even more money. With mass marketing, crypto would dominate. This is why the old legacy system wants to congeal with crypto now before it's too late, because they know they cannot compete. They know that. They even bungle it sometimes with crypto. I've heard ideas in some of the PDFs that we've read where the legacy system has floated the idea. I think this was from the IMF. Oh, the IMF. Please, IMF, just continue to listen to the Bank of International Settlements, please. Because some of your ideas are great, and then some of your ideas are like, who came up with this? Like, how could you have such extremely good ideas and extremely bad? They were talking about layering on top, and I said this last year, this would be a possibility, layering pieces of the legacy system, like the intermediaries, keeping them involved while still also trying to utilize the new crypto banking system, the new financial system pretty much, which, and they were considering how the fees from the legacy intermediaries would affect the new financial system. Why would you even allow the legacy system to bring those torturous intermediary fees into the new financial system? Are your connections that deep? They have to be. They have to be. I'm here to make money. It's like the banks don't want to heal. They don't want to make money. Their policies are, I don't understand this thinking. Let go of your friendships and your partnerships and embrace making a bounty of money, of capital. It's like they don't want to make money. It's like they want to be hemorrhaging. Guys here ranting. What's going on with you guys? All right, let's get to the lawsuit aspect of the video here. U.Today. I like to share my thoughts sometimes, though. I do. Yeah, I know people are like, Alphanine, we don't want to hear your thoughts, man. Just give us the news. Like, that's crazy. I'm a person. XRP lawsuit. James K. Fallon provides latest update on Ripple defendants and SEC scheduling order. So let's just read this a little bit here. Okay, it says, in fresh updates shared by, and this is on U.Today, by the way. In fresh updates shared by defense lawyer James K. Fallon, the Ripple defendants' response to the SEC's brief asserting that the Hinman documents are protected by attorney-client privilege is due Friday, May 13th, while the SEC's response to the Ripple defendants' reply is due May 18th. Okay, so now we have some dates to look forward to. Let's read this a little bit just to familiarize people that don't understand what was going on. Earlier, the SEC had requested to file an additional brief in support of its assertion that the internal documents related to former SEC official William Hinman are protected from disclosure by attorney-client privilege. This was granted in a text-only order by Magistrate Judge Sarah Netburn. Let me tell you something. Okay, when you're in these particular cases, you have something that hasn't been submitted just yet, hasn't been combed over just yet. The attorneys are going to say, hey, what do you have that could be damaging? Give it to us. They're going to go over it. They're going to say, hey, listen, we don't want this out there. They're going to look for some sort of technicality. This is one of them to say, listen, we don't need that viewed. Now, why do I say that? That's typically what happens. But why do I say that? I say that because remember, maybe about a month ago, they uncovered that Hinman, I believe that's this individual, was notified by a supervisory entity that what Hinman, that person, was doing allegedly was illegal. They notified this person twice. And yet Hinman continued on with that activity while this individual was still the head of the SEC. Something's wrong with that picture, all right? If that little bit existed, I can assure you that there is more. When an individual is off the rails, when an individual is out of control, that reckless nature is not limited. It's usually widespread, which means they leave a trail of destruction. They leave a trail of breadcrumbs. There's not one piece of bread. There's a series of breadcrumbs. You get where I'm going with this. So, and that was uncovered, I believe. Was that the other emails that they uncovered that in? Some people can let me know in the comment section. I believe it was. So just imagine what might be in these. And then when we uncovered that, which was amazing to me, that people kind of just swept that under the rug like that wasn't major. That was a massive bomb. Massive. And it said a lot to the judge, by the way. That's why the judge has been very favorable to Ripple. The judge sees what's going on and cannot turn a blind eye, especially as I stated, when someone's that reckless. Imagine what's in these emails here. Now, so anyway, so circling back around, this is what I was saying before. It made sense when we discovered that as to why the SEC was fighting so hard not to let those emails be read. It all made sense. Something's wrong. And it also makes sense when you're thinking about why they take the regulation by enforcement route so often. They just recently did it with NVIDIA. It was about their mining fees. And they asked NVIDIA to pay a $5 million settlement, or not settlement, sorry about that, penalty. It's all about the money. This is a money game for them. It's not about protecting the investor. So we're going to leave that right there. That was on U.Today if you want to read a little bit more. Okay, so let's move on here. I'm going to give you this little bit. Let me pull this up here for a moment. Okay, so I'm about to go over a document. This is one of my favorite documents so far in a long time. Understand, a lot of PDFs, I try to sift through the PDFs. It takes a lot of time to go through all those pages. A lot of it is repetitious. Any of you who have been on these sites independently and read through the bevy of PDFs, you'll understand that a lot of different individuals within these banks, they say the same thing. So then if you're going to present this to people, you have to make sure that it's something new, that they're saying something new. There's a new angle they're taking, new information brought that is not redundant, that they're not saying the same thing that someone else said. A lot of times it's that way. So a lot of PDFs are useless and you go through them and you're like, I wish I found something, but I didn't. You toss it away. This one here is impactful. So I'm just going to read this a little bit because most of this document I'm going to go over in the members only video that I'm going to be releasing and making. So let's go here. This portion of the PDF is titled How to Model a CBDC, Motivations and Design Features. Let's just read this little piece here if you bear with me. It says, discussing an environment with a CBDC raises the question of modeling choices. Given the potentiality, critical importance of various design features, the limited practical experience with CBDCs leaves many open questions as to which particular elements might end up being the most prevalent. Okay, let me stop right there for a moment. This is why this piece here is significant. So you have a lot of blockchain companies now that are able to offer digital sandboxes. Mark my words, I feel strongly that digital sandboxes like what MTech can offer, like what IBM can offer with XLM, which on their chart for WorldWire, they still have Stellar Protocol at the heart of WorldWire, okay? So, and that's huge implications there because of the liquidity aspect of Stellar. And I think that IBM, if they continue on that path, we'll have to see, with Stellar XLM being at the heart of their particular system, that liquidity is going to be unbelievable that they require for that system. But anyway, moving on. IBM is able to provide digital sandboxes, virtual digital sandboxes. And I'm not sure. I think Algorand can also provide a digital sandbox, but I'm not sure. There's a bevy of bank coins that can provide those. Now, with the digital or virtual digital sandbox, they are able to test out extensively, all the different aspects of a CBDC. Keep in mind, all CBDCs will be designed differently, obviously. I mean, they could have them all uniform, really, because they want interoperability, but that's not the way that some of the banks want it. So even though the Bank of International Settlements is screaming to the top of their lungs that they want everyone to be on one accord, now it's sort of becoming not so much with CBDCs, but we want everyone on one accord with monetary policy. We've been reading about that, right? So now all they're worried about is interoperability, which if they're going to have interoperability, you have to have a digital sandbox. There's no time to test CBDCs out. The reason that there's no time to test CBDCs out is because of the ailing world financial systems. They have to roll something out that's going to save them before it's too late. They have to. And so that's why I believe digital sandboxes like what MTech is pushing HBAR. Take a look at their white paper. It's unbelievable. That type of technology, digital sandboxes, will allow them to do what's necessary. And so the fact that they're admitting, let's read that one more time. Where did we leave off here? But anyway, that's why they're admitting that there's really no time for testing. They can't test them out, right? So let's continue on here. The limited practical experience with CBDCs, oh, that's what they said. The limited practical experience, they can gain that practical experience is what I was saying with a digital sandbox. They can run so many different tests. And you can even put it on fast forward so that you can test it out more quickly. You can simulate everything. And the degree of speed at which you simulate is just a matter of programming. That's it. So let's continue on here. We rely on the literature discussed above to identify several possible realistic features, focusing on the following key dimensions: form, access, remuneration, and cross-border availability. This is where Ripple comes in. When they say cross-border availability, access, listen, liquidity. They're going to need liquidity, whether it's from XRP, XLM, or Algorand. They're going to need liquidity. And I'm waiting to see a few more developments from HBAR. I believe that's coming very soon. This paper will define a retail CBDC as digital central bank liability, which is account-based. Wait a minute. Let me read this a little further. That's interesting. Which is account-based, accessible to general public, interest-bearing, and internationally available to non-residents. You know why that's interesting? Is because they were saying, and they go a little bit further here. They were saying that the central banks don't want to be directly involved. This is something that the Bank of International Settlements made very clear. We don't want to burden our employees. So we don't want to have to be the ones running these accounts for the public. We don't want that. Now, wholesale, sure. Wholesale CBDC, account-based, perfectly fine. That makes sense. Only so many banks, and you trust those banks, and it's not too much extra work. That's understandable. And I'm right there. I agree with the Bank of International Settlements. But this here is like the opposite of what they've been talking about. So let's just read that again. This paper will define a retail CBDC as a digital central bank liability, okay, which is account-based. That's the part, account-based. See, that goes against the digital cash aspect, like private money, public cash. It's yours, it's public because you can have it, you custody it yourself, but it's anonymous, is what I'm saying. Sorry about that. I have to rephrase. It's anonymous cash. It's like just like cash. It's digital cash. But let's continue on here. This is why it's important to read these PDFs. Things evolve, they change. And so when they change, we can get a better look at how that money might come about. All of these things affect the money that could come through and when it can come through and who's in charge of it and who's going to be in charge of the liquidity and how much they're going to pour into it. I mean, there's so many different aspects. You have to really read these things. But anyway, these features are consistent with the common foundational principles and core features of a CBDC as outlined in the joint report by major central banks. See Group of Central Banks 2020. I might actually do that. And can be implemented technically within various architectures. We discuss the motivation behind these features in more detail below. The first set of considerations is whether CBDC, okay, here we go. The first set of considerations is whether the CBDC should be account-based. No, I don't think it should be. You can't handle it. You can't handle that. You know it. You already said that you don't want to. I don't understand why you're backtracking. Of course, maybe there's something I don't know. Let's continue on here. Let me not jump out the window. Okay. The first set of considerations is whether the CBDC should be account-based or token-based. Thank you. Token-based all the way. Retail, if you're talking about retail, token-based all the way. But let's continue on here. It says, whereas token-based CBDCs are similar to cash, that's what I just said, with the difference that they take the form of cash cards or electronic media, wallets, which enable anonymous. That's what the people want. They want their anonymity. Don't bite the hand that feeds you now. You have the new financial system without you. But let's continue on. That take the form of cash cards or electronic media wallets, which enable anonymous peer-to-peer payments. Account-based CBDCs, on the other hand, constitute deposits generally envisioned to be held in a central bank account to be used either for payment and / or store of value purposes. That's exactly what I was saying before. That's what I was saying. So, Let's continue on here. The token base is much better for what they're trying to do across the world. I mean, when I've read so many PDFs from all of these different banks, the Fed, even some commercial banks, Visa, and what everybody wants to do. We've gone over this on this channel. So many videos we've gone, all of this information is on those old videos. And it seems that the people want digital cash, anonymous. They want their anonymity. Of course, there's a certain degree of anonymity that's acceptable, but let's continue on here. In addition, they could allow the verification of users' identity in different layers. Exactly, I agree with that. And the reason why I say that, and I stop there, is because the different layers would be being able to identify you without holding that information and thus allowing you to keep your anonymity. You get what I'm saying? Okay, so in addition, they could allow the verification of users' identity in different layers and thus offer advantages in terms of monitoring illicit activity in the payment system. A key concern of all central banks, making them a more realistic design choice. I can agree with that. A related consideration is whether the CBDC would allow access only to selected users, such as financial institutions or operators of payment system. Wait a minute, let me read that again. Sometimes my mind is processing things. I'm still thinking about the last sentence and then I'm processing this as well. I'll read it again. That's why I do that. Not for you, I really do it for myself, okay? A related consideration is whether the CBDC would allow access to only selected users, such as financial institutions or operators of payment system. So yeah, okay, so I'm glad they put that there. I don't know why you didn't start off with that. That's a wholesale CBDC. And you listen, if the banking system wants to survive, I don't really care if they survive or not. But no, let me change that. I do because I want their money. I have to say that I do care because I want their money. So they must survive. So we can take their money. When they pull it into XRP, it is the liquidity. I showed you the document, so there's no refuting that. That's a fact. But so for them to survive, they need a wholesale CBDC. Do not be arrogant and choose that hill to die on. Don't do it. Issue your wholesale CBDC. Issue your retail CBDCs. Don't be lazy. You need it. Let's continue on here. Some of you may say, why do they need it? They're hemorrhaging money. They have rampant money mismanagement. Okay. They even had it was like a Davos recently, right? One of those panels where they were talking about how they mismanage the money. And even Kristalina Georgieva, I give you the name. She even said, hey, a lot of times we're like a kid with a ball and we're just punching it down the field. We don't know what we're doing. She said that amongst everyone. They all laughed in like agreement. Okay, so they know that they have mismanaged the money. It's not necessarily Kristalina. She's a very brilliant individual in my humble opinion. It's the people that are actually the thinkers that put all of these policies together behind the scenes. So they need a way to bring in excess capital. They need a way to have a liquidity cushion because they don't have that just yet. They don't have it and they are vulnerable, very vulnerable, which is why they have to consider this or they would not consider it. It is not in the government or the central bank's nature to consider new things when they have been dominating for so long. They definitely take that old saying, if it's not broke, don't fix it. They take that very seriously. They really do. But let's continue on here. It says, in addition, where do we live off? Let me just make sure we're in the right place. Okay. In addition, they could allow verification of users in different layers. Oh, we read that part. A related consideration is whether the CBDC would allow access to only institutions. We read that part also. Okay. Various policy objectives that central banks may have, such as improving financial inclusion. That's a far stop. Well, you can't stop, right? Because this is the only thing that you have to come off of your high horse out of the heavens, gliding down off of your throne, your perceived throne. This is how they carry themselves as central banks, like as though they're so high and mighty. This is the only way that you can come down to the people that are on the ground suffering and actually float the idea that they should trust you. So you have to say, we're trying to include you. We're trying to help you out. So I guess you can continue, I guess. It says, financial inclusion may suggest that retail CBDCs are the most impactful design option. Didn't I say that at the beginning of this? Didn't I say that? I knew that. International Monetary Fund. Oh, wait, this is not the International Monetary Fund. Sorry about that. But central banks, all of you, I've called all of you. I know they're not going to, actually, there's one that does watch, actually. But anyway, if you wanted to come to this conclusion, you could have just called me. You could just call me. I'd tell you. Oh, man. You know who's the most difficult? The most difficult to get a hold of all the financial institutions? You want to know? Remember last year I put out the call logs. I showed you. I called these banks, right? I told you. I put out the number for the Bank of International Settlement. I showed you my call log, European Central Bank, IMF. But do you know who's the most difficult to get a hold of? I give you a second to guess. Of all the large, and I have to call them a financial institution now because that's what they're getting into big time. IBM. IBM is so difficult to get a hold of. I called the one office, the main office. Then they linked me to another office. Then they told me that they weren't able to connect me. I called another office, right? That was like the technological division for the Worldwire, right? And then I'm talking to an individual. They put me on hold and it cut me off. Just dropped my call. So I'm like, okay, well, let me call a different section of IBM, right? So it was like an IBM office. There's one, I think, in New York. That's the first one I called. Then there's another one somewhere else in the United States. I said, well, let me give them a try. I'm trying to just get an update on Worldwire. That's it. They were the most difficult, okay? Difficult. And none of the banks were difficult like that. None of them. The Fed, Federal Government, United States, Boston Fed was not difficult like IBM. Actually, they're quite easy actually to deal with. Anyway, I don't it's a random thought. Just a random thought. I don't know where that came from, but it's good information if you want to make calls. Just prepare yourself. This is a fight. There's a fight. They don't give up information easily. They definitely don't. So I'm going to leave you with that here. I have to get to making this members only video right now. That's just a taste of it, of what I typically try to do when I do come across good information like that, enough to make a members only video. At times, information can be scarce. Like I said, a lot of PDFs are just repetitious. It's very rare now. It can change. Very rare now where they release something significant and impactful. I think this document is one of them. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.